Folks, if you're not following this young man, you must. Certainly, if you're interested in real estate as a homeowner, investor, or just interested in housing. The one and only Lance Lambert. How you doing, sir?
Doing good. Thanks for having me on. Housing. Always a lot. And this week we have something interesting. I have a poll that I did of Twitter followers this week.
Yeah, why don't you say, and again, this is something you've done over time. So maybe next week or the week after, we'll do a trend line. But I thought you asked some great questions. I actually participated in the survey. Uh, I did because I wanted to see the results and I wanted to see where people were a little wonky. So let's get into it.
Yep. I'm going to share my screen.
Yep.
Let's see.
I can see it.
So the first thing I ask people is, do you believe U.S. housing activity has already bottomed? I'm asking about existing home sales, not home prices. And
Correct.
and U.S. implies national.
Mhm.
Maybe I should have said national. Uh, Here we have very likely is 20.5, somewhat likely 25.8. So you add those two together and 46% plus
Sure.
think, we bottomed activity wise. Although, is it Simonson? Mike over at Altos? How do you pronounce his last name?
Simons, I think.
Simon.
Simon. Yeah.
He actually commented at the bottom and he said, I was thinking activity had bottomed, but now I
But he's
don't.
not sure. Yeah, I saw
And a
that.
part of that being there's just not a lot of listings. So unlikely, a little over 50%.
Yeah. So let's put some numbers on this because I track this a lot as you do. So currently the lowest run rate, at least over the last 12 months, was 4.02 million for existing home sales. I believe last month's run rate was right around 4.2 million, or about 180,000. I think it did peak in January, February at 4.4 million. I called the bottom at 4 million even, probably 6 months ago. I'm going to hold to that. So I think I put in very likely for this one. But you're right, Mike, Altos Research. The problem is listings, right? That's one thing I love that Altos Research does. It's the most up to date on what's happening right now because it's a weekly look at listings. And yeah, you could be right. We might break below 4 million. But yeah, it's going to be wild to watch.
And one thing that's I do think that bulls, bears, negative, positive, in the middle. I think almost everybody thinks the high point has been hit, that high
Okay.
reading for existing. I think for the year that people are like, that's
Oh,
probably
4 February. Yeah, no question.
a
I
lot of
totally
people
agree.
for the year.
Totally
Whether
agree.
we test that bottom again, we'll see.
Okay.
Uh, do you believe U.S. home prices have bottomed? For this one, I'm asking about national home prices. 31.5% of people say yes. Unlikely.
This one surprised me.
Closer to 60 something percent there.
This one surprised me because, again, a lot of Twitter, at least, is full of doomers talking about a housing crash every other tweet. So to see that and you have a lot, I mean, you have thousands and tens of thousands of followers. So to see that roughly 31% are saying, yeah, likely. And the bottom would have been what, February, probably?
The reading is January.
Oh, January. Okay. All right. So, and again, 60, whatever it is, percent saying we haven't. Or unlikely.
But,
Okay, wait.
A lot of variables. It's like, do we get a recession? Do we not? Right now, we're a little less than a percent above the bottom for seasonally adjusted. Without seasonal adjustment, we're like almost 2 off the bottom. But that's without factoring in the rest of the spring growth. We'll probably get a little more than 3 away from the bottom at some point. And some of these indices are already starting to get back to the all-time high.
Yeah.
Schiller would take a while to get there if it happens.
Yeah. Yeah. So I want to admit that actually I read this chart wrong. This doesn't surprise me. This is what I thought the doomers would say. I read it backwards. So 43% of the viewers are saying more pain ahead. I read it incorrectly the first.
Yeah, very unlikely. Yeah.
Got it. So that makes sense.
1 in 3 think the bottom's been hit. And for me, a bottom is not like the bottom for year over year. Like some people it is. To me, it's like the lowest indice reading in the Case-Shiller is
Got it.
bottom.
Yep.
That's how I see it. And
Okay.
even that is lagged from the real world,
Mhm.
of course.
Yep.
Do you believe the 30-year fixed mortgage rate has already peaked? Last fall, we were at 7.37. During the debt ceiling debate, we went a little over like 7.14, I think, at the
Yep.
high when the spread got really high. Very likely, 60% of people think the top mortgage rate rating, although we're only like 40 basis points from the top right now. Still, most people don't think we're going to get there.
Yeah, and this is one I agreed with the masses. But again, to your point, we're only 40, basis points away. Yeah, I do think rates trend lower is my general thought, but damn, I could be wrong. I would have, and I said publicly on Twitter, and I admitted this was an L. I took the loss. I thought rates would go down after we had a CPI, a PPI, no rate hike, and I was wrong this week. I got it ass backwards this week.
I think the thing right now with these the yields in the bond market in general is there's a lot less volatility, and
That's true.
you can kind of move it from what they were expecting, right? That's kind of what we've seen, I think. You did have the short term move up for the debt ceiling debate, once it, but everybody kind of knew it was going to come down a bit from there.
Yeah. Yeah.
But things have kind of firmed up, and there's kind of been this higher for longer expectation. But it'll be interesting to kind of see what the next few weeks do. Because in the next 4 weeks or 5 weeks or 6 weeks, there's going to start to be a consensus of no rate hike the next meeting or rate hike meeting. So that is like a real variable because, that can kind of affect the whole curve out. So that'd be interesting. Do you believe the peak inflation CPI reading is behind us? When I wrote this, to me, that means like the actual numerical year-over-year number this cycle, not like 10 years from now.
Right.
What did it top out at, like 9%?
9.1.
Yeah. Almost 80%, over 80% of people think that that's behind us.
And again, the last reading was 4, so we're less than 50%, right? We've come down more than 50% from 9.1.
Yeah. So let me show the historical numbers real fast.
Sure. So I think you have to stop sharing and then reshare. I don't think the window will move. Oh, maybe it will. Oh, there you go. You got it.
Okay. So in January, 36% of people thought that home sales had likely bottomed. And then later in January, it was 44. So we had a pretty big jump once that, that bigger reading came up.
Okay.
In April, it was 40%. Into April, 43. And then now, what was it?
I don't remember. Sorry. 46.
46. Okay. So that's been the highest one. So it's kind of been fluctuating in the 40s these past few. For prices in January at the very entering the year, essentially 16% of people thought that we had bottomed. In the month 18, April, and this is the point where we're starting to actually get the data from the beginning of the year and showing the prices moved up. 22 thought it had bottomed. Into April, 27% had thought it had bottomed. And now in June, 31.5% think it's bottomed.
Okay.
Mortgage rates. Entering the year, 65% of people thought that we had already peaked. 65% again at the end of January. 60% early April. 61% into April, and then now it's 61% still.
So pretty stable.
And then CPI, entering the year 77 thought it, and you can see we've essentially been plus 70.
Yeah, very cool.
Yep. So So most people think that that sales have not bottomed, that prices
Correct.
have bottomed, that mortgage rates have bottomed, and that CPI has bottomed. But the
Right.
sales number is very close, and
Yeah, the
slowly.
sales number is the number to track. I think this year is all about, and let's be clear, I think next year is the same thing. I think a lot of people, especially in the real estate and mortgage industry, are hoping we go back to 6 million transactions. Dude, we're not going back. Not next year. This move up thing, the lock in, all this stuff that we've talked about. And we're going to have another rough year in housing, meaning somewhere between 4.38 and 4.4 transactions, 4.4 million.
I think there's a little too much overthinking the mortgage rate lockdown.
Okay.
Uh, mortgage rates moved up from 3 to over 6. New
Mm-hmm.
listings went down 20%. Churn went
Correct.
away.
Yep.
Mortgage rate lockdown's real. Now I get the
Exactly.
I get
Exactly.
the argument that when mortgage rates have fallen in the past, that active listings haven't moved down
Mhm.
necessarily.
Right.
Or maybe new listings haven't when they move down a little bit here and there. But when you move that much that fast, the affordability shock is so real. So if you don't want to call it a lockdown, you want to call it an affordability shock, okay, because it's the
By all
new
means. Yeah.
payments.
Yeah.
But at the same time, for a lot of people, price doesn't matter that much for a move up if you're selling,
Yep.
because you're going to buy into the same market probably that you're
Hmm.
selling. So it's kind
Hmm.
of a wash.
Right.
If my home was worth 5% less today, and then I sold it and bought something else, that home is probably worth 5% less than I'm buying. If my home went up 5% value and then I bought something else, they probably in the same market maybe each went up 5%.
Well,
The variable
Lance, let's even do it work. Let's even do it this way. Let's say you're an entry level homeowner like you are. And let's say your home went up 5%. And you want to be a move up buyer, right? Again, above the median, as I've talked about for a long time, is a little softer. So let's assume your property went up 5%, and let's assume the move up went down 2%. But it's still more expensive than yours. It just is. It's just a bigger home in a nicer area, blah, blah, blah. But you add into that, you're going to go from a 3% mortgage to 7.
Yeah.
It's about the payment. It is always about the payment. I wish people would figure that out.
And so I think that's what some people who argue the rate lockdown's not real is they're saying it's just the payment. It's just the new payment. And it is just the new payment. But the variable that's changing there that they care about is the mortgage rate.
Exactly.
Because price is kind of a wash for a move up buyer, unless they're moving markets and one market has a different situation than the other.
Yeah, exactly. Well, Lance, this is a lot of fun. Where can people find you?
Yeah, Google @NewsLambert, and you'll find my Twitter. If you want to read my articles, just Google Lance Lambert Fortune.
Yeah, if you're not following him on Twitter, I don't know what you're doing. You've got to follow him. Thanks, guys. Take care.